Is the 50-year mortgage from Trump's administration the answer to more affordable housing? Let's go ahead and unpack that here today in this market update. Hey everyone, this is Zaid Hanna with the Hanna Group here at Real Estate 38, and we always start with what's active on the market. We have 832, while at the same time we have 418. The pending column is dropping. This is very common due to the holiday season. People are distracted. Buyers are not out there. However, the good properties are receiving multiple offers. In fact, for the past 5 weeks that we've listed about 8 properties, all of them are pretty much in contract, but the condos are taking a little bit longer to sell. Single family home, the first 6 to 8 days, it's gone with multiple offers, including a fourplex. We had 6 offers on a fourplex, and that's kind of unheard of. A lot of them are sitting on the market. So what's really happening with the new law? They're trying to change this, well, not change, but have another option to say, okay, we have a 30-year mortgage, and we want to open up these options for a possible 50-year mortgage. So I want to give you these 2 scenarios for an average Bay Area home buyer, San Jose, average price point of about $1.5 million. So let's go through that. Let me give you that example. So we have $1.5 million purchase, $300,000 down. An average rate that we're seeing today is 5.75. So we're going to assume that both of these now are $1.5 million purchase, loan amount of $1.2 million, 5.75, same rates, 30-year mortgage and a 50-year mortgage. So on the 30-year mortgage, we have $7,000 monthly payment, mortgage that is principal and interest, and the 50-year is $6,100. That's $900 in savings. So far, it sounds great. Let's save the buyer more money. Let's give them the opportunity to actually buy more. So, but the interesting part that I want to highlight here, so let's say you bought this house and you hold on to the house for the next 30 years. You would pay interest. So you're borrowing 1.2 million. The interest on it is 1.32, 1,320,000. Now on the 50-year mortgage, your interest is going to be $2,457,000. You are almost doubling in interest for that extra 20 years. So is it wise? Is this going to solve the affordability problem? For you to save $900 a month, but for you to pay for the next 50 years an extra $1.1 million in interest. No, that doesn't add up. Is this product great for somebody that needs to come in? They're young, they're early, and they just need to buy it for the next 2 to 3 years and eventually graduate out of that 50 into the 30? Yes, absolutely. But is this a long-term fix? Absolutely not. We need the lower rates for this affordability issue that we have here in America to actually improve slightly. The 50-year mortgage, it's great short-term, horrible thing long-term. My opinion, would love to hear yours. Put it in the notes and would love to hear your thoughts. If you need anything else in between, feel free to reach out 408-515-1613. Bye-bye for now.